Hello everybody, welcome back. Let's have a look at Bitcoin, shall we? There's no point in looking at any altcoins specifically, but if you do want me to look at them, just let me know in the comments and we'll have a look at some of them. It's going to be, if anything, it's going to be more or less, talking about levels of potential support, which may be a fair way away from now. And the reason I say that is we go back to the Bitcoin dominance chart, and it's kind of, when I drew this crude sort of projection of where I think the dominance chart is going to go and how long roughly it's going to take, and what this was really about was about saying that, look, when Bitcoin dominance is this low and bouncing from a pretty much a historical support quite low, it doesn't really matter if Bitcoin goes up or down. The better place to be, whether that's to make more money or to lose less money, is going to be in Bitcoin, really. And we're over the last 3 weeks we've had a bit of a move up now, and I think that this is still the direction it's going to go, which means that it doesn't matter what you're hedged in. Bitcoin is probably going to be the better place to be, generally speaking, until we reach levels of support on this Bitcoin dominance chart, and then we can look at specific altcoins and see if they come down to some of these supports that we map out in advance. That way we'll know or get a better idea of whether it's time to go in or not. And that could just be from a tether position or rotate from a Bitcoin position into those things. So let's have a look at Bitcoin. So as far as Bitcoin's concerned, it's always been a bit of a top-heavy chart since we got this death cross on the exponentials, the short signal on the Ichimoku cloud, obviously the death cross on the simple moving averages, and there's not really any aspect of this chart which is bullish. I've said that for a little while now, and it still is the case. So what we're looking at here is our level of support back down to between 28 and 29,000, where we tagged here on this nice big buyback. But to be honest with you, since we've had this descending wedge formation, I think this is more likely to be the place to play the move, right? So this is a bullish formation, right? The descending wedge is a bullish formation once it's resolved. Usually it will resolve to a breakout, okay? But at the moment we're sort of halfway down from the top, so we've been rejected from it once again over here, and we've been heading down ever since then. And if we don't catch a bounce, pretty much I'd say right now around the 30,000. I don't think we're going to get a bounce around the 29 or 28. I think what we're looking to do is actually make our way down to the bottom side of this descending wedge formation before we find another bounce, right? And as you can see, we've had little wicks below it, but generally once you reach the bottom of there, we have bounced back up and up again. And then what we'll have to see is, even though we're within the descending wedge, are we going to get our way up to the top of it, or are we going to be rejected from previous levels of support, which are now flipped to resistance? So I would expect, to be honest with you, that we will have further downside from here, which means that the levels of support that we've mapped out, which is this one here, so we've got obviously the one that's broken down recently. As you saw, we got to the apex of this triangle formation, which is the top range of the descending wedge, and also a strong level of support at 33,000. That 33,000 is also the green 50 exponential moving average on the weekly, and I've always said, if we start closing weeks below there, then that implies bear market, right? So it does imply bear market. So as far as I'm concerned, now we've got every single component available to imply a bear market. So it does. The chart reads as a bear market. That's how it physically reads. We're below these levels on the weekly. We've got all the aspects of a daily that suggest bear market, and so understanding that, or recognizing that, should I say, means that all we can do now is expect lower prices, right? But as with any bear market, if we go back in time to previous bear markets, bear markets do come with significant bounces, right? This one so far has had the worst bounces of any bear market that I recall. So if we see this was a giant big move down, 45% over a small period of time, but then from there we bounced back up 56%. To be honest, we did have something similar to that, but I have to say it's been pretty lame as far as bounces are concerned. Pretty lame. The best one was the original one, and then since then they've just tailed off. And to be honest, I would be looking for a decent bounce at some point along the lines, but it doesn't mean a reversal. Not until we start to see these moving averages level out, and they're not leveling out, they're literally diverging, which means strengthening, which means more downside is almost certainly on the cards, right? So if we expect more downside with Bitcoin, you can only expect more downside with altcoins. And altcoins will amplify those downsides. I mean, we're back probably a few weeks ago. We were looking at some of these really small cap alts like Bepro and VRA, and I was saying, look, these are going to be on the radar for when they reach their lows. And I can't remember which one, or it might have been both of them. They're already down like 90%. And I said, look, so don't be fooled in thinking that it's down 90% that you can buy it here and expect a bounce. That it can go down another 90% on top of the 90% that it's already gone down. That's easily possible, and it wouldn't surprise me if some of those coins like that go down by as much as 99%, right? Which then will offer opportunity later on down the line, but not right now. Buying into things like that, and I'd probably almost say almost any altcoin, unless you have a reason to buy them, like a fundamental reason, for instance. Catching a knife on any kind of altcoin is going to be pretty dangerous. But again, I do expect to see this descending wedge formation play out as support and resistance, which means that we're not too far away from a potential decent bounce, and that is going to be around roughly between 26 and 27,000, if we were to have a decent drop. And the way I'm looking at it now is that it does look like there's likely to be a further drop, a sharp drop, more than there has been already, basically based upon the fact that the volume is still trickling off to pretty much lows, and with that usually will come more volatility. It'll creep in, so I wouldn't be surprised at all to see another large red candle, maybe even this week, bring us all the way down to that level where we will find our bounce. And it's at that point where we see if I wouldn't say a matter of strength, but buying pressure. Is the buying pressure enough to bring us back up above the 29,000, which was previously a support? Is that now turned to resistance? If it's a resistance, then the bear market, I think, is probably going to get more sustained over a prolonged period of time. Now, I did say, way back, said, look, at the end of the day, I think the summer is a complete write-off for Bitcoin. We're just going to have to forget about it and carry on with our lives, and maybe get back into the market later. If you feel like you want a dollar cost average into the moves down, that's fine as well, and a lot of people that are doing that, and that is, again, I suppose, a reasonable way to keep skin in the game. I mean, I have been doing that to an extent, but now that we've closed below that level, that 33,000 level on the weekly, plus we see formations breaking down on the daily, and short signals still in play on the Ichimoku cloud. I'm not looking to dollar cost average any further unless we reach significant lows, such as roughly between 22 and 24,000 would be my next level that I would feel confident of buying a little bit around there. And if that fails, then I suppose it would be about between 18 and 20,000. And you've got to plan for these things. Otherwise, what's the point? And I expect Bitcoin to recover. The question is, when will it? And if we're looking at the chart alone, it doesn't look like it wants to recover anytime soon. The only way we're going to get any kind of recovery is once these moving averages really start to level out. And at the moment, we're not getting that. We're getting the opposite of that. We're getting divergence. We're getting the strength of trend. And if we think about what these moving averages represent, if you imagine them basically pointing to the direction, I know they're all lagging indicators, but they're pointing to the direction that are going down. The reason I say that is because we can use them as supports and resistances. When we're below them, they're resistance. When we're above them, they're supports. So they can prove to be very useful on the way up, because we go, okay, we're going up. We're going up. And if we're able to pick up some more along the way, we do it at these levels of support, these moving averages. The 10 exponentials when it's very bullish. Center of the Bollinger Band is on a deeper pullback. On the deepest pullback, it with green 50 exponential, and this is the way that the moving averages can often be used. So they point to the direction it's going at, and they're used as supports. Now on the way down, it's the opposite. So we're thinking about this on the way down. We're thinking, all right, so we're below all the major moving averages right now, which means that each one of these is going to prove to be a level of resistance. And at the moment, the 10 exponential is hanging around about 31,500. The center of the Bollinger Band is down at 30, more or less 33. The green 50 exponential is 35,500. The 200 exponential, which is one of the most important to break above, is all the way up here at 38,800. Until we start to reclaim these, incrementally, there's not going to be any sustained uptrend, right? And in order for these moving averages to start to level out, there would need to be one of two things, right? It would need to be a long drawn out process of sideways action, to allow these to basically merge into one, which makes it easier for us to make steps above them, for them to then start pointing up and diverge in the correct order. At the moment, they're all on top of each other. They're exactly the opposite of anything that's bullish. And what you want to see is the 200 at the lowest and the 10 exponential at the highest, and then we can flip them to support. So at the moment, they're not. They're resistances. So if we think about how this played out in 2018, we broke down. We see that they were being used primarily as resistance on the way down. So resistance here, resistance here, resistance here, resistance here, and then finally, as we zoom in a bit closer, we can see how the lower term time frames are merging, but they're still being used, especially the green 50 exponential, as resistance. And finally it gave out, and then when it gave out, it did accumulate for a prolonged period of time, allowing for these moving averages to basically merge. And then if we zoom in a little bit closer, we can see how we started to reclaim them. So there's still resistance here in the 50, and then we finally started to reclaim these moving averages. And it's at that point that people could think, right, this is still accumulation, but it's accumulating in an uptrend. We're above all major moving averages, for the majority of the time, and that's when buying pressure really kicked in. And then finally, we got above the 200 exponential, which meant that it was only a matter of time before we got that golden cross, and it picked up momentum and went into the bull market that we've been in since 2019. Basically, we've been in a bull market ever since. So at the moment, we're as far as a bull market's concerned, this is not a bull market. This looks like a bear market, and with the way that the chart is presenting itself suggests further downside. So we're still within the wedge. Technically, we're still within the outside range of the inside range. So this is the inside range between 33 and about 41. Outside range is between 28 and all the way up here at 48,000. But if we start breaking down below this outside range, then we've not got much to go by at that level. It's just incremental steps down until we work out where the bottom could possibly be. And if this is a bear market, we are in an official bear market, then we could be only halfway down now. So I don't want to scare anybody out of any position. That's not my intention. I just think that at this point now, it is a matter of just throwing caution to the wind, allowing the situation to play out, and staying safe. And if you're able to play the ranges, play the ranges. If you're not, then don't worry. You can dollar cost average on the way down, or you could wait for a more safe entry, which would be when we get certain signals that we're going to go up again. And we don't have any of those signals right now, I can tell you. Not on any time frame. We might find bounces, but there's no buying signals on this, which means that it's very unlikely to see any buying signals across the board. Now, there are some altcoins that I've noticed, some of the ones that I'm holding actually, that are doing okay. They're doing okay. They're holding up okay, and I don't understand why. Like YFII, for some reason, is holding up okay. But generally speaking, altcoins, with the nature of that Bitcoin dominance chart, altcoins look like they've got definitely a lot further to go. And the smaller the market cap, the chances are you're going to get, it's going to get pretty wrecked, to be honest. But that's what we like about altcoins. We need them to be wrecked, because only can you start to make the 10x or more out of altcoins once they've become completely wrecked and so oversold that people will snigger at you for even mentioning them again. And we'll get to that point maybe towards the end of this year. We will be at that point again, and when we can make some significant money. But for the moment, the market is going to trend with Bitcoin largely, and Bitcoin wants to trend down, and that's okay. That's okay. It can't always go up, all right? It can't always go up. So we'll just leave it and see how it goes. But if you want me to look at altcoins, let me know in the description below. And hope you have a nice day. Take it easy.